Hims just released their earnings and it was so investors are asking, when will the stock go back up? And some investors are even asking, will it ever go back up? I'm going to break down what you should expect. Let's get into it. All right, so when will Hims go back up? Spoiler alert, I do think it will go back up. Now exactly when it will, let's go over that and why. So if you can, give me a like and subscribe. I really appreciate it. Hims, they announced their earnings after hours, and since then it's been down 20%. Now the day of, it was up 3%, so investors were actually excited. Well, they didn't disappoint in an emotional reaction. It was just to the downside. So it's down 20% since they released their earnings. The Novo deal happened down here and it was in the 14-15 range. It popped all the way up here around 27. That was the peak of the Novo deal hype. Then since then, it kind of went down, up, but we're still down 10% since that hype of the Novo deal. So why is the stock down? Let's just be honest. Their earnings sucked. Revenue went up only 4%. The cost of revenue went up 36%. Right there, investors are just want to sell your stock almost. Unless you come out with some amazing, statement of something, right? Or it was absolutely expected. The gross profit and gross margin both down 8%. The marketing was the only really good thing that they showed anything positive. It went down 4%, but that's because they had to do a lot less marketing because they had to change what they were providing and that whole lawsuit, right? So really not great. The loss or the income from operations, which it was a loss, is negative 235, percent. Net income or loss, they lost 92 million compared to last year's 50 million, which is a 286% difference. And then the EPS, which is negative 300% difference, they lost 40 cents instead of 20 cents as they did last year. Or they made 20 cents last year, but they lost 40 this year. The estimates were around 2 to 4 cents. So that's the thing. Not only did you come in with numbers like this, but these were not expected. These were not expected to be this bad. One just kind of thing on the side that I really did not like. They put 2025 twice, right here. And they're not comparing, they're comparing 2026 to 2025. This right here is a huge sheet. This is talking about how many subscribers you gained, how the monthly revenue per average subscriber, the United States revenue, rest of world revenue, and total revenue. This is probably one of the biggest sections of your earnings, and you messed it up. I never want to see that again from them. That is a horrible slip up. I don't know. I hope that you could somehow go back and I don't know if it's just on their page. I don't know if you can change it, but this is bad. It's a bad look. Anyway, though, subscribers went up 9%. But the monthly revenue per average subscriber went down 6%. So that's not good. I said in my last video, if you can keep it at around 85 and put it was actually 83 for the year end, but if they could have it at 85 to 87, that'd be great. They brought it at 80. United States revenue went down 8%. That's scaring investors. They're thinking, oh no, they're not going to be able to make any more money. They had to wind down and change operations. They went from selling one product to a completely different product. And this completely different product that they were serving is the people they were just fighting with. So there's definitely a lot of that stuff happening. So there's some explanations, reasonable explanation to that. But still, investors never want to see this. The rest of the world revenue went up almost 1,000%. Great. That's amazing. Still not enough to at all ease the feelings for the United States revenue going down 8%, right? So the total revenue only went up 4%. So at least the revenue went up, but that was only because of the rest of the world, right? The last time Hims recorded a loss in a quarter was in September of 2023. It was 2.5 years ago, 10 quarters ago. Not good. Let's just go through a quick timeline. Again, we're going over why the stock is down right now. February 7th, they offered, or I think it was like right before February 7th, they offered the pill, and then within days, boom, they took it off the market. Novo sues them February 9th. So they're suing Hims and Hers, and Hims stock falls 18%. Then, Hims says, hey, Novo, this is a blatant attack. This is also February 9th. Then in March 6th, they make a deal. So you're talking the first 2 months just off the bat were bad. I mean, January wasn't great. They were having, some issues with, okay, the GLP-1 shortage is gone, and now you have, the FDA is starting to kind of crack down on some people, and are people now just going to go to the FDA approved one round, not the compound. So it was already having a little bit of questions around it. But then once they released the pill right after Novo, and then they got sued, just that news around it, they probably lost a little bit of customers or a little bit of their swag from their brand, whatever it is, right? So that didn't help. Then by finally March, after 2 months of the 3-month quarter, you make a deal. But it doesn't mean that everything is all good, right? It took up to March 26th for them to actually offer anything, right? They couldn't offer it yet because they didn't have all the logistics in place and all that. But now finally March 26th, they were able to offer it on their website or on their platform. So the whole quarter has a lot. There's basically no Wegovy. I mean, you're talking just a few days of Wegovy in there, and and they had to stop with the compounding. And so there's just going to be a lot. It was very inconsistent to what you should be expecting for the future. This was a very crazy quarter. If we kind of go through all the news that they did, like what they've had to deal with the last 2 years, they had their first botched Novo deal. They actually released that they were going to do a deal. I believe it was here because the stock crashed when they announced the deal because, again, margins. That's what people don't like, is that when you do this deal, it does crunch your margins down. So investors were not excited about it. Then they actually said, no, Novo, they said, no, Hims and Hers is doing something wrong and we don't want to do a deal with them. The investors are actually happy about it. And it shot the stock up because they're like, okay, now you're doing compounded drugs, which are cheaper for you, cheaper to sell, but you're going to be making a lot more money off it. Well, the GLP-1 shortage ended, and so the FDA started getting on them and all this stuff. So that was starting to now cloud over it. Then they got the Novo lawsuit, right? So all of these things were starting to happen. And then the Novo deal, finally, okay, that's great, but then they had these bad earnings. I do believe forward looking, we're not going to really have all of this stuff. All of this is over with. All of this is done with. This is all done. It's a Novo deal, okay, the bad earnings, but the only reason why is because you kind of had, a bad quarter here, and then hopefully we should be moving forward, after that. So when will the stock go up? That's the main question. I was starting to kind of get into, the improvement of the stock. If you look at the stock, it's actually up 58% in 68 days. Since it was crashing when they're, okay, we're going to have the lawsuit, and then it was kind of bouncing around the 13, 14, or yeah, almost hit the 13 basically, but 14, 15 range, 16s. It's up 58% since then, right? So, okay, that's good, right? In 68 days, that's not bad. International, up 1,000%, Abow's up 900 and something percent. That's a key driver for the future, right? If they can keep increasing. They acquired Zava, Eucalyptus. They have H&H Canada now running. Honest Health, that was 2021. But these three are all going to be stuff that's really going to be pushing along here now in 2026 and 2027 for sure. They have all these acquisitions. They have an outsourcing facility that they bought in 2024, the lab facility, peptide facility, and the Your Bio, which is going to be helping, for the blood draws and all that for at home and stuff. That's all good, right? The peptide facility, people are excited for that, and of course we just went over the international. So these are all good. They said that it's going to provide a foundation for their long-term vision, right? So hopefully everything works out, right? That's the goal. For the second quarter of 2026, they expect revenue of $680 million to $700 million, which is 16% year over year. For the full year of 2026, they expect revenue $2.8 billion to $3 billion, 19% year over year. So nothing crazy, but when you are starting to get your revenue growing more and more, it is harder to grow at those paces of 80%, 100. I mean, they did have quarters they were growing 100% year over year. That's typically not gonna. You shouldn't expect that to happen anymore. So unless they acquire someone really big that's doing, $2.8 billion in revenue. So, but doing 19% with a really botched quarter, it might not be so bad, right? So let's see, and then let's see exactly what happens. Maybe they're kind of sandbagging it and they actually, put more. So about the Novo deal, basically the operational transition is effectively complete, but the financial normalization will continue through 2026. Sorry, I've had my computer shut down a few times. I've got a little upset. This is like number 3 version on this. So the operational pivot, they've now shifted to the branded GLP-1s. So, we know that. Now all they do is sell Wegovy and Ozempic. The customer migration is substantially complete. So all the customers that were doing compounded are now back to the branded products. Financial stabilization is in progress. The financial transition, the absorbing of the lower margins, will impact the earnings all the way up until the second half of 2026, with a return to full profitability expected in 2027. And that's because, again, they're going to have, international growing. They're going to have these other parts growing, but the margins are going to hurt them this year. That is going to happen. The marketing transition is basically complete, right? You had to go from discontinuing all your compounded advertisements to now you're selling FDA, approved Wegovy. The marketing spend has fully reallocated to now how are they going to do the branded GLP-1s, and now the messaging again is going from you're not having the accessible compounded alternative version. Now you're having the access to the FDA approved medication to try to make it sound nice. It's weird because they weren't going against the FDA, but they were trying to be the alternative. And now they're just gonna be like, look, this is what we sell. We're the third party. The logistics and supply chain is basically complete as well. The internal assets have been decommissioned. The company took a $33 million write down. So they took that big hit, and so that pretty much signals that they are done with that category. And the logistics have now shifted from internal manufacturing to now just doing a direct distribution partnership. And their shipping cadences, obviously, the branded medications are now available. So the shipping is standard around the commercially available form rather than the custom compounded vials. And then the compounded GLP-1s are now only shipped under a clinically necessary exemption, meaning the mass market of the compounds are done. Peptides is what really people want to be talking about because that's the future. We do have the FDA on July 23rd. They're going to be talking about these 7 peptides, changing the classification or reclassifying them from category 2 to category 1, which would then make them basically allow compounding pharmacies to manufacture certain peptides, which Hims is one of those compounding manufacturers. Why are peptides the future? Well, they have precision targeting. They mimic natural signaling molecules that have very few side effects. Lower toxicity, so they're made of amino acids. Unlike some chemical drugs, your body breaks it down a lot easier. And then they're faster to develop. Peptides are a lot easier and cheaper to design and produce rather than the large protein. Really, we're waiting for the oral delivery, the pills. If you could take it with a pill every day, it's a lot easier. Right now, a lot of people have to take the shot once a week. Just that, people don't really want to do as much. So once we start getting, the technologies, because your stomach eats it really quick, so peptides don't really work through the stomach as much. But if they can get that to work, they call that the holy grail, basically. Then you can it opens up peptides for everything. Peptides can help with neurodegenerative diseases. Peptides are being engineered to cross the blood-brain barrier, say that 5 times fast, to treat previously untreatable conditions like Parkinson's and Alzheimer's, right? That would be a big market. Now, that does not mean Hims is going to get into all these markets, but again, it's what peptides do. And they will be compounding, and they'll have, these facilities that can compound them. So it doesn't mean that they have to actually sell them on theirs to actually be able to compound for other pharmacies. With the rise of superbugs, if you haven't heard of superbugs, they're basically all these, the viruses and the bacteria, all that stuff where it's like, if you take an antibiotic, it's going to fight it and it will resist it. But the peptides, they can physically disrupt bacterial membranes, making it much harder for bacteria to develop a resistance. And of course, AI is now used to screen trillions of peptide sequences to find it a perfect fit. So you can have a drug discovery go from years to months with AI, and then the customization, it allows peptides to basically be personalized, tailored to a person's genetic markers, right? Which is what Hims really wants to do. The current peptide market is currently undergoing a massive gold rush. Over the next 10 years, it's expected to at least more than double. The current market's about 80 to 140 billion. It's projected to reach about 300 to 335 billion by 2033, 2035. Keep this in mind that GLP-1 too, that's a peptide, the patent becomes public in 2030. So if peptides themselves, just certain peptides, become such a big market by 2033, 2035, then 2030, GLP-1 becomes a public patent where Hims doesn't have to pay and have their margins aren't lower, or now it's their stuff that they can produce and they can make. By 2030, that's only in 3.5 years. I know that seems like kind of far, but 3.5 years, you're talking about a massive, just continue to grow. And once that hits, your margins immediately change, just like this quarter. It'll be the exact opposite. Now, obviously, it's 3.5 years away, but they are excited, Hims, and they are going to get into peptides. I'll actually play a clip. Andrew Dudum, he was on this podcast, and he said that right now, Hims and Hers is seen as a GLP-1 company. And at first, they were seen as an ED company, and then they were seen as a hair loss. They were seen as all these little, depending on what they were putting out there, the product which was the most popular, that's kind of what they were seen as. And he said that they're going to be seen as a peptide company in about a year. That tells me that they want to be doing peptides in about a year. But he also did say, I'll put this clip too, that they don't want to be first in the market. They want to be best in market. So once peptides, we have the July 23rd meeting going, and let's say they actually reclassify it, in a few months, by let's say September or something, and they're able to actually do something, they're not going to come out right away with the product. They're going to make sure it's tested. They're going to make sure everything is good about it. But the fact that they do say they're going to be a peptides company, seen as a peptides company in 1 year, that does make me feel like, okay, they are going to be pushing it as fast as they can. So here are the clips.
We launched GLP-1s and everyone said, oh, now you're just a weight loss business. And, a year from now, people will say, oh, you're just like a peptides business, probably, if I were to take a guess. But what I always come back to is not being first, but being best. So that from a brand standpoint, people know Hims and Hers to be high quality and trusted. Like when we actually bring something to market, it's safe, it's done right, and it could be something that's powerful and important for your health.
And as you can see, the last year, the interest in peptides, this is on Google Trends, the peptide interest has gone up a lot. In the 5 years, obviously, again, this is mostly from 2025 into 2026 where that big growth has happened. And since 2004 up to present, again, really a big gold rush right now. And it's, peptides are good. Peptides are not new. They are not new, but they're very good. They're good. They're safe if you can get them, from the right person. If you can get them from the right guy around the corner. No, if you can get peptides from the right company, the right pharmacy, depending on what the peptides is and all that, it works well for you and they're safe. They're better than like these chemicals and all that stuff. So it is good. They're not new, but AI has been able to really push what they can be used for. And again, AI is just changing how the timeline of things. So that's good. So I do appreciate everyone for watching. I do believe Hims is going to go up. I'm not going to say when. You never know. With a stock like Hims, it could go back down to 15. I don't think it will, but it could. It could. For all I know, it could go right back down to 15. And then I also think it can go up to 60. I think it can go up to 60. And I think it can just go everywhere. That's what this does. But I don't know if you heard me a few times. I've mentioned 2030 and 2033 about the peptides. I mean, I'm trying to think long term, and I know, you know, you don't want to think, okay, well, things can happen between now and then, and there's other growth company, whatever. But this company is not valued that much. You know, they're not making that much money for what they could potentially be doing. I do not see the market cap really moving significantly lower than where it's touched before. I don't think this is going to be a stock that has to do a stock split where it's, you know, the stock is at $3, $2, and now they have to do a stock split because it's so low. No. If anything, they'll have to do the other stock, you know, a stock split where I forgot if it's reverse stock split, which one's which, but like the stock split is where the stock's too high, right? I guess the reverse is when you have it at $2 and you're like, oh, I want it to be 20, and then you do a 10-to-1. So this stock I could see eventually hitting like $300 and then having to do a stock split where it's now 10-to-1 and it's back to 30, right? I just don't see Hims unless they just fail completely. It's going to be one or the other, obviously. I do not think Hims is going to just, I think they're going to go out swinging. So they're going to be one of the top dogs, or they're going to do something that really messes them up, maybe. Or maybe they're number 2 in the business. I don't know. But anyway, I do believe long-term in the company. I'm investing into it. So I put my money where my mouth is. And that's that. So yeah, thank you for watching. I really appreciate it. Give a like and subscribe if you can. And never forget to earn it, save it, invest it, buy low, sell high. I want assets, not liabilities. And you can count on compounded interest.